On the session, no big gains on the broader index, up about 0.1%.
All up, a little bit disappointing. Our market up by 0.1%, and that was a good result given some weak leads from offshore markets. But volume still very anemic, $3.6 billion being traded, and today is options expiry for single stocks. So it doesn't look like there was a lot of activity related to options, and I guess a lot of our derivative sales desks on the insto side have disappeared, so not a lot of insto volume to go through anyway. But in terms of performance, we did do well, up by 0.1%, despite base metals being mostly flat, and we did see copper, gold and oil prices down in the US overnight. The property sector was a standout, and I think that was the big story of the day. We did see our market being lifted by the defensive areas like the consumer staples, the healthcare, the telecom sector and the property space. And usually when we expect a gain on our market, we expect it to be the materials and the financial space really powering ahead our market. But today it was really all about the defensives. AGM season still in full swing, and we saw annual general meetings from the likes of Amcor, Echo Entertainment, Newcrest Mining, as well as Suncorp being some of the few. And of course BHP having its meeting in London tonight. We've seen some big moves on the back of some comments coming through from AGMs. Echo Entertainment was one which was down by 3.7% today. We also saw Newcrest Mining down by 1.8%, but I don't think it was just Newcrest being sold down. It was a pretty difficult day for the gold miners. We saw St Barbara Mines down a massive 10.9%, and that was after its quarterly production report, which was out yesterday. And also Alacer Gold down by 9%. It also had its quarterly production report out yesterday, and it was dropped from the UBS model portfolio. So unfortunately, not a good impact in terms of prices. So all up, the Australian market doing pretty well, but once again, very light volumes.
Market oil price at about a 3-month high today. Suggestions demand for steel out of China very much recovering. Not a huge reflection amongst the iron ore stocks. Usually you see them move in sync with them.
And I guess that was one of the disappointing thing about overnight markets. We saw that HSBC flash PMI number for October coming out, and it was at a 3-month high, a reading of 49.1. It was higher than market expectations, and that really helped our market and the Aussie dollar yesterday. However, if we have a look at how overnight markets did react, we didn't see a huge reaction at all, and even more disappointing that we didn't see a huge reaction in terms of commodities. If anything, we saw that strengthening of the US currency really adding to the weakness that we saw in commodity prices. And we did see copper prices, gold prices being sold off in New York, base metals mostly flat on the London's Metals Exchange, and we did see BHP and Rio Tinto with not very big moves in offshore markets. So despite those better Chinese numbers coming through and signs that the Chinese economy has bottomed out in the third quarter, I guess we didn't see much of a reaction in terms of the mining stocks or in terms of some other commodities.
About Fairfax, it's very much, if you like, at the coalface of a challenge though that is being felt by the broader media sector. It's not just Fairfax.
I mean, if we have a look at Fairfax, this is a stock that was looking cheap a year ago. It was a stock that was looking cheap 9 months ago. It got even cheaper 6 months ago, and 3 months ago we were saying the same thing. And I think the very important thing here is just because something is cheap does not make it a good investment. And really what you want to see is a combination of cheap as well as a catalyst for the share price to run. You also see the same type of thing on the market where you see a great quality business which does nothing in terms of share price action for a year or 2 years. And the key here is that you need a change in the valuation or for the share price to move. And with Fairfax, what we're really looking for is a turnaround in the business. It is facing both cyclical as well as structural headwinds, but this change in Fairfax's business is going to take a couple of years, and this is a transitional time for the business. You can make a bet right now, or you can wait till there are some clearer signs that the underlying business is starting to turn. Yes, things are looking cheap, but really you want to see a turn in the earnings as well to make it a good investment.
Guys,